right. So let's talk about monthly trader, right? We talked about the active trader. Let's talk about monthly trader. So monthly trader, it's a different model, right? We're talking about the seasonal chart. So just like the seasonal chart that we talked about, seasonal chart shows you output of our monthly trader model. We call it tradesman bulls, tradesman bears model, but this is a monthly trader model that makes predictions for the, it runs every weekend and makes 4 independent predictions. It says where the stock is going to be in 20 days, where the stock is going to be 30 days, where the stock is going to be 40 days, where the stock is going to be in 50 days, and then it makes predictions. And if 3 out of 4 are higher, then the next level of analysis, basically, model says where do you think which of the stocks, based on these predictions, the model does a best job analyzing. So it basically says, well, CNP. So you have 3 bullish, 3 bearish trade ideas. Usually I hold the position for anywhere from 5 to 20 days. And this is analysis in between the earnings. In between the earnings, for the next 90 days, where do we think CNP is? So again, it gives you 2 suggestions: enter at 28.22 or enter at 28.50. So the signal was posted on September 9. If you enter the position at 28.54, 28.50, then at this point the stock is up $1.50. So it's pretty good return for 1 week. It's a 5% return. Yeah, so you would actually be out in 1 week. So I should have entered that trade myself. It's missed it. Okay, so good. So this is an example where the model analyzes on September 9. It was posted 28.50 by the stock. If you entered at the 28.50, because the market did not sell off, then you would be up 5%. If you waited for 28.22, I think it came close. But let's say if you waited for specific 28.22, you would not be in the trade. So again, Vlad, what's the criteria? Usually we give you this plus minus standard deviation of error plus 2 choices. Let's say it gapped up and it opened up at 28.64. So usually, if you're looking for 5% profit, you don't want to enter CNP at 30, right? You're probably too late. But if it's up 1% on the stock, maybe 50 basis points, and you're looking for 5% return, then it's still appropriate. So a lot of these answers depend on your portfolio allocation and what target gain and returns you're looking for. In this example, I think this is exceptional because market rallied. We achieved 5% return in only in 5 days. But more often than not, it's maybe 1%, maybe 2% in 1 week that the market moved. Then you have to ask yourself, if you're looking for 2% return, then if the stock is already up 2%, you probably, that risk versus reward doesn't make sense. If you're looking for 5% return and the stock is up 50 basis points, I think that's appropriate. So that's how you decided an entry and exit point. Same analogy, the cheaper the price you're buying, the higher percentage of winning trade, right? That's a little bit intuitively, right? If you always wait for a cheaper price or for a meaningful support, your percentage of winning trade will increase. The number of trades that you are taking will decrease. I don't think there's a wrong or right strategy, it just depends where you are on the spectrum of risk taking.